Hey, what's up everyone? Welcome back. In today's video update here for Quant, we are trading at $158.31. 24-hour volume, we're down 27%, and market cap, we are up 1.79%. Heading over to our daily chart, I am on currently the candlestick pattern charts. I am going to switch it over to Hikinashi candles because I do want to show you a pattern here and basically show you where the price is going to go. Normally, we see the parabolics are at the very bottom, and that does trigger a buying opportunity or shows us the current trend is an uptrend. If the dots are at the very top here, it shows us it is a bear trend. One of the reversal signs for high Kanashi candles is essentially seeing a lot of these doji candles or seeing a lot of the reverse other color candle with a lot of high swing wicks at the very bottom and at the very top here. So we obviously know with these red candles, it is currently showing us the trend in a bear trend. One of the things that we look into if the trend is going to be reversed is these candles here. So you'll notice this resembles a doji candlestick with a high swing candle and a small little body. We can see that the candlesticks here in the red has the body at the very bottom or at the very top with no wick at all. It's a shaven bottom. So this shows us a strong momentum in a bear trend itself. Now, if we are looking for a reversal hint or any signs that this downtrend is going to stop and it is alleviating the pressure from the selling end to the buying end, essentially we need to be able to see these candlesticks here. So if we're able to see candlesticks in the green, if we're able to see really high swing candlesticks, then the trend itself would eventually change from a trend that's going down into a uptrend. But it's not really giving us a whole lot of hints here. Day after day, it is continuously going into heavier of a selling phase. And if we're looking for an area of support, I'm going to show you guys in the 4-hour time frame. Just going to switch that over back to a candle formation. Again, with our MACD indicator, we can see heavy selling pressure increase in the bars here of our histogram and darker colors. So again, momentum itself still is strong here going in a downtrend. The spaces in between our signal line and our MACD line is further apart, showing us again increased in momentum. If we do want to have any type of optimistic in the trend reversal, then we would be seeing these two lines gradually coming together and lighter in the color as well. So that's something that we always look at for our MACD indicator. Here we see the RSI, it is past the 50% here, didn't really hold support at the 50%. So now our K line is at the 46% here. Now 46%, we could either treat it as an area of support here at 47 and then here at 46. It was only treated as a very good support if we were able to see that crossover as a buying opportunity here. We see support here at 38%, crossover as a buying opportunity. Now we take a look at our D line, really far apart from our K line here itself. So we're not going to be seeing that uptrend reversal anytime soon. I am most likely thinking in the 4-hour chart here that the price is going to come down to $150 range, or 148 is our target. So here, I was at the 2 hours. Here at the 4-hour time frame, again, high Kanashi candles, we are showing heavy trend in the red. We do see some lightness, okay? So some of these swing candles are getting more sporadic. We're not getting any shaven tops for the red. So there is a possibility that it is going to trigger a buying opportunity. Just double check your MACD indicator and the RSI as well to see if it is going to trigger that buying opportunity. It has triggered in the last 2 or 3 candles a selling opportunity. You can see this with the lines here grazing crossover above each other. So it is still going to come back down. Here's a good area of supply here, or area of support at 31% of our RSI. Hopefully, again, we do catch ourselves. But if we take a look at that 31% previously right here on October 30th, it flipped from red over to green at the MACD indicator. So it initiated that buying opportunity with the strength of the MACD line here. So that's why I love the RSI and the MACD indicator paired together, because you can kind of see a forecast of if the momentum is going to be building strong by pairing the two together. So as the selling triggered on this end, we see lightness in this end here. So it could possibly flip flop and actually open itself up to get a buying opportunity, so long as the MACD indicator here shows it in going into the green and confirmation of that candlestick into green, because we always want to wait until the candle does change and solidify that change as well. Heading over to the 2-hour time frame, I am going to zoom out just to kind of show you guys this point at 23% of our fib, because in here there was a lot of areas where it held support at 23%. Okay, so 23% is going to be our next indicator where the price is going to drop. We can see again a few areas here where it dropped just in between 50 to 38, but it's basically going through our entire fib chart right now, and essentially it's going to be touching. So you see this touch right here at 38%. You see this touch here at 23%. A dramatic turn, of course, is going to be down at the 48%. But what we can see too is that it's not going to happen like anytime soon here. On the 2-hour time frame, essentially volatility needs to open. So the Bollinger Bands itself need to expand and allow that volatility to be in the market if we are going to drop down even further to the 148. If that does happen again, we need the momentum to be as strong as this area here on November 2nd, earlier November 2nd, for that price to literally drop down to the 148s, but it is narrowing in the Bollinger Bands in a downward position here. So we may consolidate again to resistance to support. There is something that's happening in here that I don't really like. I don't really prefer to see all of these gaps in the marketplace. I don't like left liquidity. It kind of opens it up as to we are going to fill it later on in the marketplace. But again, it's still kind of iffy. If we do see more gaps in an upward direction, then we may see some corrections as the price either goes up to resistance and then come down to an area of support. But I've talked a lot. I do apologize. Normally I like making more condensed to the point videos, but apologize again. Let me know what you guys think down below. Like and subscribe to the video as well, but I'll see you next time. Bye.